All right, guys, what's going on? Hope you guys are having a good day. So in this video, we're going to talk about market structure and why zones fail. As you may recall, I said supply and demand zones do not work 100% of the time, just like any other strategy. So today, we're going to talk about a concept that can help you take more higher quality setups and ways to tell in which certain setups will work and certain setups won't. So let's just dive right into it. So one piece of important information that I want you guys to know is that you should only be buying demand zones that have taken out supply and only selling supply zones that have taken out demand. So what does that mean? So I'm going to show you a few examples right here. So let's take a look at Zoom. So you can see obviously Zoom, is in a downtrend, right? Lower lows, lower highs, lower lows, lower highs. And we see that this demand zone forms right about here, right? Price drops, we have a pretty strong rally, right? Nice demand zone forms. And what happens? Price ends up coming down. We end up getting a small reaction, right? So maybe, you have a trade where you're looking to get long here. You have your stop down here. Maybe you're looking to target up here or this supply zone up at 123, and you end up getting stopped out, right? Why did that happen? So the concept that I want you guys to understand is market structure, right? So why did this demand zone fail? And the reason for that is that it never took out this supply, right? So I want you guys to really look at this, right? We have lower low, lower high. We create a lower low. We create a lower high. And then we have a lower low. This low, right, this demand, all the buyers here are not able to take out this high. They're not able to take out the sellers at this supply zone, right? We have this rally, base, drop supply zone. The buyers are not able to take out supply, right? So sellers are still in control, right? Because if you remember, we're in a downtrend, right? So sellers are in control. So if we're in a downtrend, this demand is not able to take out this supply. Sellers are in control. You don't want to be buying this demand zone, right? Sure, it worked for a little bit, right? You can scalp it, take a few profits, but you're not going to get any high quality moves off of this, right? You want to make sure that demand is able to take out supply. Let me show you another example. Let's take a look at Apple. Apple over here on the daily chart, right? So we have price. Let me just draw this out for you. Price comes up, price comes down, up, down, up, down, right? Making lower lows, lower highs, right? Lower low, lower high, lower low, just slightly, but lower high, and then we end up making a lower low, right? So this is the start of a downtrend, right? So price, even though this is a good demand zone, right? We drop, we base, we have a huge gap. It's a very strong move, all the way up to 176 from 160. But price is not able to take out this supply, right? So sellers are still in control, right? If price can't take out this supply, this demand zone is not going to hold. And that's exactly what happened. It ended up going all the way down to 151, right? If price were to do something like this, or went above that supply and then come back down, we probably would have saw a bounce, right? So that's something that I use. That's market structure, right? Price couldn't break supply. Sellers are in control, so you don't want to be buying demand. Let me show you the best example I can show you on PTON. PTON, right? So what happens? This is supply, right? Price comes up, we rally, we base, then we drop. So we draw that supply zone here. We hit supply, and we end up breaking this demand, right? So you don't want to be buying this demand zone here because this demand was not able to take out this supply, right? Very simple concept. So price comes down, we take out this demand, and then price ends up coming up and takes out this supply zone. Right, so now we have a shift in market structure. We have a shift in trend, right? Now demand and buyers are in control. This drop base rally demand zone was able to take out this high, able to take out this supply zone. So now we can start to look for buying and demand. And what happens? Price comes down to this demand zone, right? Or we could even draw the zone here. Price comes down, holds in the zone, and then ends up breaking the supply and moving higher, right? So once we got that shift in market structure, once demand was able to take out supply, buyers exceeded sellers, that's when you want to go and look to buy demand zones, right? Take a look at NQ on the 2-hour chart. You can see price started creeping up. We have a nice supply zone here, right? Really fast move, nice rally base drop zone, and we just went right through it. Now, why did that happen? The trend, right? Trend started to shift, so we're making higher highs, higher lows, and also this supply zone right here, this drop, was not able to take out this demand, right? It didn't even really reach this demand zone, unless you count it from here. If you look at a higher time frame, it would be right here. Yeah, we couldn't even really reach demand, right? Just barely. So the fact that price or supply couldn't even take out demand means you don't want to be shorting in supply, right? And since this demand, right, new demand formed here, was able to take out this supply and this high here, price came down into this demand and then ended up going higher, right? And then you don't want to be shorting at this supply as well because it wasn't able to take out this demand. So market structure is all about learning where's your highs, where are your lows, was your supply able to take out demand, and if not, was demand able to take out supply? And that's going to give you a better clue of when to get in and out of your zone. So I hope you guys enjoyed this video, and I will see you in the next one.